Joseph, I'm a rather large, middle-aged American male from New York, but let's pretend for a second that I'm a little old English lady living on over the Scottish border in Coldstream. And I've become worried now that the Scottish are threatening to leave, that my gilts, which I've so carefully saved for my retirement, are going to lose their value. Am I right to be so frightened?
No, you're wrong. And it's interesting because you would think potentially some of that gilt stock would convert into Scottish government debt if they were just sharing out the debt based on GDP or whatever. But that's not how it's going to happen. In one of the very few acts of advanced preparation for a potential financial breakup, the UK Treasury said months ago it would continue to honour all outstanding gilts.
So the gilts I have in the cupboard remain guaranteed by the English banking system and the English government.
Well, so the UK government.
The UK. I'm sorry, the UK government.
And also, it's very important because legally they can't do anything else really, because contractually the UK is the.
But surely the debt could lose value if no other reason, because the debt to GDP ratio changes. Scotland leaves, takes some GDP with it, all the debt stays in England. England becomes less creditworthy, surely.
Well, Scotland will be taking less than a tenth of UK GDP. And so if you look at gross government debt GDP for the UK as a whole, at the moment it's about 89%. And so if Scotland leaves, it would go up to 97%. Which, compared to everyone who's lending to Italy at well above 120%, and they seem okay with it, and Italy's borrowing at very low rates at the moment, this wouldn't affect the UK's credit too much.
What then is an old lady such as myself to worry about? They're taking all the oil with them, and that is a key source of revenue that will be lost.
Yeah, I mean, it is what assets would the UK have, and how would Scotland and independent Scotland and the continuing UK share out assets and liabilities when those liabilities aren't the debt. Interestingly, I mean, Scotland would still probably have to negotiate with the UK about its share of that debt that the UK would be taking on. But that would be a bilateral government-to-government debt. And therefore, the UK's claim on Scotland for that share, however it was negotiated and ended up, that would be an asset, a claim on Scotland. And Lex would probably suggest that the UK should securitise that asset and sell it back into the market and get cash flows from it. I think Scottish institutions would not have very many sort of Scottish assets because the Scottish government would be effectively.
So there would be demand for this paper.
Yeah, it would take a while for it to issue its own debt, and so immediately you'd have this asset.
You make a lady feel much better.